Giorgio Questa. He's a visiting professor at the Faculty of Finance at Cass Business School in London. Giorgio, thanks for joining us today. Why does this keep happening?
Well, many people have asked the same question. The problem is that the structure of investment banking operations grew enormous in the last 10, 15 years, and for a number of reasons to be very long. But the internal structure has remained roughly what it was much before.
So the risk controls haven't improved? Is that what you're saying?
They have improved.
Relative to the size?
Relative to the size, they have gone down, in fact, probably. And this is due to the fact that investment banking operations are managed in a very different way, trading operations, from other businesses. For example, in most businesses, you have a certain rotation, you have people exposed to different areas, you get all these sort of things. While normally in investment bank, you start in a desk, and your whole career on that desk, until if you're very successful, you are propelled to have more desks and whatever. So this everywhere, this way of looking at things is somehow medieval. They are tiny little kingdoms, which make it difficult for centralized control and risk management. The second point is that the top management of the banks, either they are not very familiar with what happens there, and so in a way they are somehow hostages.
Isn't it their job, though, to be familiar with what happens there?
Well, things have moved very, very fast. It is difficult. I mean, the top management of many banks is just not abreast of all what has happened and the complications. And if one reads the episodes of the falls of different institutions, you see it. The second point, the regulators are slightly in the same position. If you think the Madoff scheme, in theory they were supervised by the SEC. It was like being supervised by nobody. And when instead of the bank, like UBS, both the head guy and the head of investment banking are both former traders. Obviously, they understand. But then they have a tremendous loyalty to the trading groups. They don't want to see them disappear. For example, after 2008, when UBS had massive, horrible losses, they lost a lot of people were fired, and there's been a revolving door at the top. And what did they do? They, very much quickly, they rebuilt up all the trading machines. They've been hiring like hell.
Yeah, they have.
But when you do that sort of thing, keeping a coherent, cohesive culture is very difficult.
But besides the lack of risk controls, then, besides, as you were saying, relative to the size, are traders, let's get back to the risk-taking side of it, are traders then still being encouraged to take on too much risk? Are they being rewarded for taking too much risk? And are they not being punished for taking on too much risk if they make losses? I'm not talking about these sides of losses, but smaller losses outside their targets.
Let's just start with the last question. Smaller losses are part of life in trading.
Yes.
You have to have them. The point is that probably to have better control, people higher up in the institution should be responsible for what is happening under their watch. If this does not happen, or happens only when the things are dramatic, for example, the French case, of course, the chairman had to resign. But, if this does not happen, there is not much incentive.
The buck does stop at the top, so Grubel's to blame?
Well, when you are at the top of an organization and you give the green light to a massive program of hiring one thing and another, you are. Maybe you've been unlucky. Probably they have been. Maybe genetically, UBS has been very unlucky in this area from the days it was UBS and Swiss Bank Corporation.
As you say, it's been pumping money into the bank in the last 2 years to trying to reap profitability.
Exactly.
Does this mean it's ended? The investment bank has to shrink?
Well, now certainly what one could hope is that if they redo it slowly, creating a culture that allows certain sort of controls. Why do certain banks have less accidents? Because they developed more slowly.
And UBS
has always done it in
thinks
bursts.
too quickly. And that's the answer.
The point is, there is another point which makes things more difficult for them. One has to understand also the difficulties. You can't say just whether they were wrong. It means nothing. UBS has a huge main business, which is holding accounts for clients,
yeah.
which puts them always in a very difficult situation. You don't want to scare your clients.
Yeah.
So they are bound to be a bit neurotic about it.